Hello and welcome to the Business Channel in association with the UK-India Business Council. When growth happens in India, it happens on a vast scale. At 6%, the headline rate of growth is impressive enough, but pick the right market or the right region and it could be 20% and counting.
India is a very fast-growing country at the present moment in time. It's growing from around about 6% per annum, which is significantly in excess of the UK, Europe and most major industrial nations. It has a population of 1.2 billion. 25% of the world's under 25s live in India. So it's a very vibrant economy, growing economy with lots of opportunities.
It's such a big market anyway, just from a pure population base. But obviously when you read all the statistics about the growing middle class, etc., it's just something that we can't afford not to get into from that point of view. We are in major territories elsewhere. We have talked to a few people in India before, but to be fair, I don't think those people have really suited our objectives in really getting into India in a big way. And there's certain things that we would look for in distributors in making it a real success in that market. And hence at the moment, we're really actively looking at potential distributors in different sectors of the Indian market.
In our industry, in particular, the size of the market, the defense budget is very vast. I think $37 billion in the last 12 months, 13, 14, which is vastly more than most European and other marketplaces, probably in the world, top 5 defense budgets. For the UK in particular, obviously it's an English-speaking country. The legal language is English, commercial terms are English. The growth in aerospace and defense and security is huge and represents big opportunity for key technology providers from the UK to partner with Indian firms.
Well, in our particular instance, India is extremely attractive because India is a huge producer of software. Some of the world's largest software services businesses are based in India. Some names may be known, Tata, Infosys, Wipro, companies of that sort. They employ hundreds of thousands of people together and therefore access to them makes India very attractive.
David Cameron, when he went to India as his first overseas visit as Prime Minister, set the ambitious target of doubling trade between Britain and India. We're well on the way to do that, and indeed over the last year it increased by nearly 30%. So there's a lot already achieved. There's a lot more actually that needs to be done because India's growing so fast and India's trade with the rest of the world, and particularly with China and the other emerging economies, is growing so fast that at the moment, although we're growing in absolute terms in our trade, actually as a share of trade with India, we're slipping back. So we really want to see that increase in terms of two-way trade, but also two-way investment.
Unusually, India has driven its own growth through the rising expectations of 400 million affluent consumers, through investment in infrastructure and through 20 years of opening up trade.
There's a market there of 1.4 billion, out of which perhaps there are 300 to 400 million middle-class consumers who are driving consumption and demand. And the reality of the situation is, as those consumers demand more, it's an opportunity for investors to sell product into that market. And separate to that, there's a huge infrastructure need, and that's the development of roads, power stations, bridges, airports. And there's a significant need for capital and expertise to come in for the development of that infrastructure.
If you look at Asia, India has been a significant component. And most corporates have looked towards India because of its high growth potential, because of its policies to liberalize and invite foreign investment, because of its talent pool of low-cost people who are employed in businesses. And finally, the growth potential, because unlike South Korea, Japan, and China, which have been export-led economies, India's growth has come about as a result of its middle class and the domestic consumption that has generated.
Over my last few visits, you can really see the purchasing power people have in terms of luxury vehicles, the shops, the hotels, the restaurants. The opportunities it brings to us as a firm are firstly the increased need for higher end security and training in the security field against the different agencies within the Ministry of Home Affairs. Secondly, the need for domestic air travel and international air travel. India has aspirations to develop its own aircraft, commercial aircraft, which is a big opportunity for us in our manpower section. And thirdly, the increased quality of Indian-produced technology opens opportunities for us to re-export from India into some of our other marketplaces, or even the UK, as either a low-cost exercise or just a strategic place to have manufacturing done.
India is still set to be the third largest economy in the world by about 2030. And what we're seeing in India is some states, I mean Gujarat for instance, it's been growing even faster than China over the last decade. It's set to continue doing that. So growth in India is uneven. And you've got parts of the country that are growing extraordinarily fast. You've got many, many new cities coming up, 55 cities, I think it is now, with over 1 million people, as well as the huge conglomerates, the huge urban centres of Mumbai and so on.
At a macro level, we've seen obviously very strong economic growth, 8% since 2003. It's just come off in the last couple of years. The hope and expectation is after the elections there may be an upward trend again. Within that overall picture, you've got states that are outperforming, places like Gujarat, Bihar, Tamil Nadu, all of whom are led by very able chief ministers, and they're performing at 10% and above. In the case of Gujarat, close to 20% GDP growth. It's a wonderful story about Gujarat, which is that initially, Tata Motors were looking to build their nano motor car, the cheapest mass-produced car in the world, and they were going to produce it in West Bengal, and they ran into difficulties there. Within a couple of days, Narendra Modi, who's the Chief Minister of Gujarat, had given approvals for the car to be built there. They sorted out the manufacturing facilities, and the Nano is now built in Gujarat. So that's why it's got such a reputation for being so business-friendly.
Are you going to sell direct, run your own show, find a partner, or even make an acquisition? You now have a broadening range of choices for how to engage the Indian market.
There are many options. And it rather depends on the sector that you're in, the business that you are, the size of business you are. So exporting is one, putting goods in the back of a container. The other one is actually going out there, establishing a manufacturing, processing, assembly plant. Or another is actually finding an Indian partner. And a lot of companies actually decide the latter course on the basis that it gives you immediate expertise, access to expertise, and knowledge of the Indian market without having to build that up over what is sometimes a considerable period of time.
We sell directly to these large organisations at a number of different levels in their organisation. But it is allowing them to see the software, to test the software, for them to feel comfortable with it, and for them to deploy it in the projects that they have with different customers around the world. I mean, an example of that is that we work with an Indian company whose end user is Coca-Cola. So a huge amount of work goes on in India. Our software then gets deployed with Coca-Cola in the United States.
Export is clearly one part of the equation, but I think there's more to that. I feel that if you want to really benefit from the Indian market, you've really got to be on the ground and closely associated with your local presence there. So typically most companies have sought to go into India either through establishing their own operations and relying on organic growth. Others have sought to set up joint ventures with established local players to help them navigate through the Indian opportunity. Others have gone down licensing routes or franchising routes. Hospitality sector does that, and the hotels chains do that, and to take advantage of those opportunities. And some who've been recently very bold have decided to start acquiring other established businesses out there.
We're very open-minded. I mean, we have different options in different markets, but one of the big attractions of distributors is that, one, they know their local market really well, and allied to that, what we really look for in a distributor is a well-capitalised distributor as well, because one of the key things for us is that there is an investment in stock that's held locally in that country, and distribution is really a function of being well capitalised, because we're a deliberately small company in the UK. What we would typically do is export directly to these countries. And we try and keep our margins pretty low, because we try and pass on that benefit to our distributors to make the product as competitive as possible. But in that respect, you need distributors who are able to ship a lot of volume into the countries.
I think there's a very broad continuum. There are some clients who are simply wanting to sell into the market. They don't want to establish a presence of any sort. So the next step from that is establishing a liaison office, which effectively allows you to market your product, but you can't earn income in that office. That then moves to the next sort of level, that you can set up a wholly owned subsidiary, as you can do in many other countries. The other alternative approach is to have a joint venture with an Indian counterparty, and that is very often the preferred route of investment into India.
One of the main challenges if you're managing it and operating it from the UK is identifying the right caliber of person, building again trust with that person, and making sure you can regularly visit and oversee the operation. Depends what it's there set out to do. I mean, we started with a liaison office in Bangalore, mainly to see and visit our current customers and be a point of contact for early response time. We've now developed that into a trading office, so we're in the first few steps of trading from that office. One advantage is that a lot of requirements can only be given to Indian companies, so you need that footprint.
You might be surprised how friendly negotiations in India can be, although you have to be ready to take quick decisions when you need to.
Interesting, I think there are more similarities than there are differences, oddly. So for example, most conversations, discussions, negotiations are held in English. I think there are differences in terms of approach. What you find in a lot of the negotiations we're involved in with Indian counterparties, there's a very warm, friendly atmosphere, and negotiations are generally held in a very friendly spirit and manner. And you don't tend to get the sort of harsher type of approach that you may see in other jurisdictions. That doesn't mean, mind you, that they're not going to negotiate a very hard bargain. And I think some clients perhaps underestimate the sophistication of the counterparty.
As exporters of software, we do worry about the use of our software in different countries. But we've got some clever people in our development centres in Colorado and here in the UK in Manchester, and we protect our software rather cleverly. Now, having said that, India is a very high integrity country, is our experience, and we deal with almost exclusively large businesses in India, and they have reputations and they service other large multinational companies with reputations. So we have protected ourselves and our IP, of course, through patent and trademark, through licensing agreements, through partner agreements where applicable, but we have not found it too onerous.
Typically, when businesses are looking at India, they inevitably find that they're dealing with family-owned businesses. And inevitably in family-owned businesses, they're very closely run, and the decision-making is centered amongst a few senior members in those families. So it's really about getting access to those people in striking your deals. And the other thing from our end, I think, important is to match the profile. We also have to make sure that the British contingent has senior people doing the negotiations, have the ability to come to quick decisions on the ground rather than always having to rely on the head office to tell them what they should be doing and not doing. So I think that's quite important.
You have to be seen to be there. That's the main part of it. Participate in local exhibitions. If you do have a local base, make sure your local liaison manager visits and just maintains and develops the relationship. Another interesting cultural difference which is important to see is when you do present to a group of Indians, particularly scientists, there's a lot of head shaking, which one from the UK might envisage as the person's agreeing with you. The problem we have, and I've seen many times in meetings, is it just means they've heard you. It doesn't mean they've agreed with you. So it's important to, at the end of a meeting, clarify what exactly has been agreed, so you can move forward positively.
The thing that I would encourage people to do is to build relationships. Indians are very interested in food. Food is very important to them, family is very important to them, and conversation is very important to them. So please do not get off the plane and expect to dive straight into business discussions. What you want to do is to build relationships, build trust.
Business can be complex to conduct in India given the scale of the market and its many different regulations.
India is a large market. It is complex. There are many states in India. There are 28 states, different states. 1.2 billion people live in this market. So you have to look at individual states, individual geographic regions, and understand the nuances between them and deciding where it's most appropriate for you to make your landing as a company. Whether your product actually makes sense in the south of India versus the north of India. These are things that you have to decide.
If you look at the World Bank's indexes on this issue, they rank India as 132 out of 184 countries in terms of the ease with which you do business out there. So I think there's absolutely no denying that it can be quite difficult and daunting. And therefore, for investors, it is very critical that they understand the commercial aspects, the regulatory aspects, the fiscal aspects, and some of the challenges of establishing businesses there. There are people out there who are there to help you, including the UKTI and government, amongst sort of other advisors. And investors should really take advantage of all those services that are available to them and to plan their entry strategy for India.
Well, the infrastructure and the culture is different. Although, you know, one of the jokes that is often said about India is that the UK invented the civil service there and the Indians perfected it. But if you look at the legal system, if you look at the accounting system and the tax system, it's all built on a UK base. And therefore there are similarities. But obviously, individually within the country, there are differences that one has to know.
You have to be very patient. You have to understand the culture. And in your particular field, you need to look at who the competition is. What is the overall program value? For example, there's projects that would require the initial procurement of maybe 2 or 3 numbers of a certain product. And once that was accepted, you'd be looking at large production numbers. And where a number of companies fall are putting all their development costs in the first few numbers without amortizing it over, for example, the life of the program, where competitors who have been in the marketplace for longer have developed that strategy. So you lose on price in a lot of these requirements.
Some sectors have restrictions on how much an investor from outside of India can invest in that sector. So, for example, in insurance, a non-resident company can only invest up to 26% into a joint venture in India. And in other sectors like retail, there are restrictions.
The times have changed in India where your strategy now needs to be focused on partnering with Indian firms. As the government now have put in their requirements buy and make India clause, which essentially means British firms would have to partner with an Indian firm and contractually provide the technology to the government. There's different ways of going about that. One would be a joint venture partnership. One could be transfer of technology. And there are many different forms of partnering with Indian firms, but the strategy needs to be focused in that way.
There's an interesting challenge we've found, and that is actually as a medium-sized software company selling to large software services companies in India. There's a natural and gentle business bias in India towards preferring to buy from large companies such as IBM and HP. Now, we are trying to break that, and I think it's very much to the Indian companies' benefit because innovation comes from small and medium-sized companies, and we are truly innovating. Indeed, we have innovation partnerships with some of those Indian companies.
Restrictions still apply in moving money into India and then out again, although in practice approvals are unlikely to hold you back.
India does have foreign exchange controls, and so any investment into India needs to comply with those foreign exchange rules.
There are certain types of transactions which the Indians call capital account transactions, and because of the foreign exchange rules, there are more formalities and regulatory hurdles before you're doing that. So for example, if you were to try to lend some money into India in foreign currency, that's regulated. If you sell your businesses and want to extract the cash, there might be some hurdles to overcome in terms of valuations and so on. But all in all, it can be managed and it is doable.
I think in terms of money, the foreign exchange regulations do control the way you put money into India and the way you get money out of India. It is subject to the foreign exchange regulations. Now, generally, in my experience over 20 odd years, absent fraud and criminal activity, I'm not aware of any situation where an entity has not been able to get money out of India. But there is effectively a system of approvals called automatic approvals and the approval route, which governs how you take money into India and how you get money out of India.
India may be opening its doors to the world, but conventional channels to market don't exist in the same way as the UK, so you can make no assumptions about how your goods reach your customers.
One of the difficulties out there is it's such a vast country and distribution is difficult. Channels of distribution you'd see elsewhere in Europe, for example, don't exist in the same way. And it's very difficult for a foreign investor who does not have that network to be able to deliver their product to consumers without assistance from a local partner.
India is quite an open environment in which to operate, but there are rules and regulations that you have to adhere to, just as in any other jurisdiction. So being aware of what the legal position is, being aware of what the accounting position is, being aware of what the visa issues are in relation to movement and employment of foreigners within India is very important. There are taxation treaties. There are mechanisms that you can use in terms of structuring your companies, either directly or via Mauritius, offshore entities like Mauritius, in order to facilitate the movement of capital backwards and forwards. So there are rules and regulations that you have to take cognizance of in order to make sure that you're operating as painless as possible.
Within India, distribution is a major issue. It's a very large country and the infrastructure does not exist currently for easy movement of goods in the way that perhaps investors are used to elsewhere.
It takes persistence and nerve to reach agreements in India. You can often find yourself going back to points that you thought you'd already resolved, and you'll have to steel yourself to discuss how a relationship might play out.
It's quite important to make sure that in the agreements you clearly define the roles of the two parties, their responsibilities, how the business is going to operate, what each party is going to contribute. And also, which sometimes people overlook or are not too keen to do, is to set out what you would do if things went wrong and they didn't work for you.
One of the main differences in negotiation tactics, perhaps, is really that Indian parties will keep renegotiating and reopening points until you sign the agreement. Whereas in the UK, perhaps, once you agree to a point, you move on and you don't revisit that point. So effectively in India, it's not done until it's signed.
Key thing for us has got to be that we feel like we can have an ongoing constructive relationship with that distributor. Yes, you do need to sign legal contracts, but it's much more about establishing a very good working relationship going forward. With respect to India, it's essentially the same as other markets, obviously in a much bigger way, but it is just really important that we spend a lot of time working out who the right distributors are for us, because it's a very important relationship. I think what we typically would do is we would, within a defined sector that we're looking for that distributor, we would look to grant them exclusivity, but initially that exclusivity would probably be on a pretty limited basis until they can demonstrate to us that they have the ability to serve that market, and also that, and quite frankly for them, that what we're doing for them works for them as well. So it becomes very much a mutually beneficial relationship. And once that's been demonstrated, then clearly we'd look at a longer term relationship.
Choosing your partners and making the effort to visit the marketplace as often as possible goes a long way. in building relations prior to getting into negotiations. What I would say is you need to look long term and don't negotiate just on small quantities, look at the bigger picture. Don't be afraid of transfer of technology. India is not well known for re-exporting technologies which they take from overseas. So you should be a little more trustful with the partners you take on and look at the bigger picture.
Working with Indian partners of the sort that we deal with, i.e. large software services companies, has challenges. Our advice for others would be to work the different levels of that organisation. So I suppose what I might say in one word is be persistent. Lots of the world's smaller software companies are beating a path to the major software companies in India. Being persistent, being consistent, so one visit is not going to be enough. 2 visits is not enough. I mean, we have engineers in India every month as I speak. We have an engineer in Mumbai. So in that word, to repeat myself, be persistent.
In building a business in India, you'll need to be brutally honest with yourself about how many aspects of your business you can actually translate into the market and how many you might need to reconfigure.
The main challenge for operating and running and setting up a company in India for me is understanding the environment. Being absolutely brutal as to whether your financial and business model and product model and your pricing policy works in India. Because taking a product in America or in the UK and just plonk it in India doesn't necessarily work unless you're a global brand. But many people are not global brands, and therefore you have to understand whether your tie or your shoes actually work in India from a price point of view, from a manufacturing point of view, and from a sales point of view. So it's putting in that due diligence that is actually critical.
One of the main challenges of conducting business in India is dealing with the bureaucracy. If you set up a factory or your own company in India, there are a lot of rules to comply with. Corruption actually is an issue which investors do need to be aware of, and it's a difficult issue to handle. The only advice I can give in that context is if you persist, then actually you can avoid the whole corruption issue.
I would say that some of the current challenges would include selection of the right type of partner, some of the corporate governance issues surrounding that, the very complex tax and regulatory requirements. And we have to remember India is one country but a number of states. So each state has their own rules and regulations which you need to comply with, which makes it a lot more complicated. And of course also protecting your intellectual property and extracting your cash at the right time.
I think the main challenges will be, as and when we find the right distributor, will be coping with demand, quite frankly. I think that it's the kind of product, and we have different products which we think would be very appropriate for India. I think that once people see this concept, and we've seen that demonstrated in a number of different jurisdictions, it becomes something which, someone said to me recently, goes viral. It's a great talking point. People want to share their ideas with other people, and once one person sees it, it compounds. And again, I think the biggest challenge, and it's a nice challenge to have, will be how the significant demand can be met in India.
In lining up business in India, clearly you'll have to find a balance between the potential of an economy that's developing into the world's 3rd largest and the relatively cumbersome regulatory framework that can slow business down. Yet after a rise of 30% in flows of business last year, the conclusion that British exporters are coming to is that whatever the difficulties, India is moving too quickly to ignore. Well, that's all we've got time for at the moment, but if you'd like to know more about any of the organisations that we've considered, then look at our website, thebusinesschannel.tv. Bye-bye for now.